We'll declare the meeting open at 10:32. Thank you very much for coming to this special council meeting. This is our inaugural budget day discussions, and we're pleased to get that on the go. Meeting is called to order. We acknowledge that the land upon which we meet is a traditional territory of First Nations people, and we thank them very much for the cooperation with us and the projects of the past and projects in the future. We acknowledge the custodians of our land. Further to that, Council, I must ask if there's any disclosure of pecuniary interest or the general nature thereof in these budget discussions. Seeing none, we'll move on. Staff reports, financial statement review. We'll begin the business of the meeting. Denise, would you like to lead us off with this?
Good morning, Mayor and members of Council. Thank you again for attending the special meeting today. It's a privilege to be before you. Back a few weeks ago, we had our municipal auditors join us for the 2024 financial statement presentation. And we felt at that time that it was important for staff to come back and maybe highlight and walk through the financial statements, because as fun as I think they are to go through and review them, they can be very intimidating, and they don't necessarily present our financial picture in the same methodology in which you receive it from council reports and variance reports throughout the year. So I wanted to have the time to go through and be able to answer any questions and discuss any questions that you may have in regards to Jennifer Buchanan's presentation, because she did talk about and highlight different things that the municipality staff and council need to work on in order to modernize our financial statement practices, our accounting policies, and our processes. I've been very happy and thrilled to have joined Southwest Middlesex in July, and at that time we thought that we were finished our financial statement preparation for 2024. We had our Deputy Treasurer, Sarah Donay, I don't know how to pronounce her last name. She did a fantastic job in bringing the municipality forward during the time in which she was acting treasurer, and she did a great job, and I would like to commend her here in front of council if that's appropriate. And then when I entered, we had a lot of questions, which delayed the final presentation of the statements just a little bit, because we had a previous treasurer who had been here for a very long tenure and had done a great job, and then we had another treasurer who had spent some time with us. So what that did is it provided some questions that I had, and then our auditors needed to fill in the gaps and provide some answers. So then that brought us forward to our presentation, in which council sat in on a few weeks ago. And in there were highlighted some conversations in regards to perhaps lack of modernization of our policies, or policies that we don't have in the financial department. It brought forward some conversations in regards to modernizing or perhaps enhancing or implementing some debt management, in looking at how we approach capital projects and their funding, and also looking at our reserves and what they really mean to the council, and to how we budget every year and line up whether we use our own money or whether we go out to market and receive a debenture or a loan, and how the municipality can best use their ability to leverage debt in order to move the municipality forward. So with all of that, I'd like to also preface it by saying there's many ways for us to have an accounting conversation. Accounting, I think, is super fun, but please stop me if I say something that can be said a different way. I'm a fan of bringing accounting terminology and accounting and finance conversations down to what I call the dinner table. And there's always, if I explain something and it's not fully understood, please don't let me continue. Please ask me to say it in a different manner, and I would be very, very glad to do that for you. So with the report, we've attached a few things. We have attached two draft policies that I'd like to go through with council for their review and approval. Those two policies that we've introduced today are going to be the forefront of making any decisions that will allow me as your treasurer to go in and act on behalf of council and bring forward good decisions when it comes to financial management. And then I'd like to go through the report. Yes, it's long. I think a comment was made a few meetings ago that you hadn't heard from finance, and now you are going to start hearing from finance. So I'd like to go through the report, and then we would like to go through the management letter at a high level, because I don't believe we touched on that in enough detail during the presentation with Graham, Scotts and Ends. So one of the first things that Southwest Middlesex has been very proud of, that I have heard since I've started with the organization, is that our ARL, our annual repayment limit, we don't have any debt on our books. That's a very good thing. But when we started doing some research and looking into historical, the ways the municipality approached debt, we've had internal debenture programs, whereas we've used our cash balance and we've invested it in ourselves. The internal debenture program, what that means is we do a capital project, and rather than going out to the bank and getting a cash loan at an interest rate, what we've done is we've used our cash balance. My understanding in looking back into the history is that's been an ongoing program that the municipality has supported. When we've gone back to try to see any details on that program, we're finding, we're going through the exercise of digging back through records to see how that was presented to council. And that's one of the prejudice for us coming to the meeting, is because we don't know if the conversation has ever come at a detailed level to the horseshoe. So if we go to, I need to share my screen, I apologize. On the screen, I have the report. So we've gone through the background where Graham, Scotts and Ends had highlighted where we've been for 2024. And it's important to note that through all the conversations that we have today, that the municipality does remain financially stable. And the message that I'm sending to council today is that we can meet all obligations, and we have been meeting obligations. That's the first and foremost that council, I wish for you to hear, is that everything that we're going to discuss today is manageable. And with the complement of staff and the finance team, I have full confidence that in 2026, the reports back to council are going to be different, positive, and forward-moving. So when it comes to interpreting the financial statements, as I mentioned, it can be definitely overwhelming, and that's the preface of the meeting today. And when I go to page 2 of the report, one of the items that I've brought through the financial statements, and it's one of the very first statements in the Graham, Scotts and Ends package that we received, and this is our consolidated statement of financial position. This statement, as we see it, are just a bunch of numbers, but it is a very valuable statement for us. And what that does is it indicates for us how we're debt servicing. So at the top, you'll see the financial assets, and you'll see that our total financial assets, which are items that are liquidable. So our cash is money in the bank. Our cash is money in the bank, and I'm going to go to 2024. is cash in our bank. Our taxes receivable are also somewhat liquidable in the fact that the ratepayers are just a little bit behind for $1.8 million. And based on on our new processes that we're going to be reviewing and implementing into 2026, I'm looking forward to bringing that number down by assisting ratepayers in paying their taxes. And then our accounts receivable is quite high for our municipality. And as we spoke about drain receivables when Jennifer was here presenting, we did in 2025 go out and bill out a large amount of the drains, so we will see that coming down. What we do have, though, is within the past few years, our processes for collection have not necessarily been reviewed, and with changes in staff and changes in senior leadership, it's something that has kind of fallen along the wayside. And I'm working currently with the finance team and with Amanda on reviewing our processes and realigning how we do things and how the staff approach different collections. So I'm looking forward to that number coming down in 2026 as well. However, it is still liquidable. So at the end of the day, we have what's considered like a cash asset of $6.2 million, if you can see that on the first section. And then we go down to our financial liabilities. One of the highlights that I would like to make notice to council, it is not normal practice for your bank balance to be as a liability. A liability means we owe somebody money. Whereas in our bank balance, if we refer back to our own checking account, that's considered overdraft when we go beyond zero, when we go negative into zero. So we don't, like as a municipality, we don't want our cash balance to be on the liability section of our financial statement. And if you look up at 2023, we had $1.7 million in our bank account, and we didn't have a liability, which means we had $1.7 million in our bank account to pay our in-year operating expenses. That bank account would hold our reserves, our obligatory reserves, our grants, and our cash balances through tax levy. For 2024, we did not have any money in our bank account. Then,
Under financial liabilities, I see 2024, and I guess that'd be the end of 2024?
that is correct.
So it was, bank overdraft was $344,332. 2023, there wasn't a bank overdraft. So that would correspond to our bank balance.
That is correct.
Not this total financial, or no, net financial assets debt, because there's a lot of other things included in that too, including the landfill closure of almost $5 million.
That is correct. So if I can continue with the bank overdraft, thank you, Councillor McGill, that's a great statement. The municipality and every other municipality in Ontario, in the beginning of the new year, we do by bylaw what's called the temporary borrowing bylaw. And what that does is it allows the municipality, because cash flows are not specific, they're timed with grants, they're timed with tax payments, and then the construction season, unfortunately, isn't a monthly cost that we have the privilege. We can confirm that in the spring we're fixing roads, and in the fall, in the summer, we're doing construction and capital repairs. So there's from time to time throughout the year, a municipality may need to use their temporary borrowing bylaw, and Southwest Middlesex is $1.5 million, and we have that set aside with our bank, who is on record of CIBC. And if a municipality finds that their cash flow is in need of a little bit of a boost, as we would with our own bank account, we could dip into that $1.5 million. So what that means is at the end of 2024, we were sitting in our line of credit. We were sitting in our borrowing bylaw. We had used the bank's money in order to service the municipality's operations and capital needs. When we do go down, as Councillor McGill pointed out, we do have an asset retirement of $4.9 million, but that isn't a That isn't a number that just sits on our bank account. Council approved many years ago for the closure of the 2 landfills, and during that, PSAB and CRA requires us to put money away, kind of like, as I've heard Councillor Vink mention, amortization. When we replace our assets, we actually need to put money away for the replacement of those assets when they become end of life. So we do need to have $4.9 million in our bank accounts, either through cash or plan to debt service that. But we do have to have that, and that is the amount of the obligation to retire the asset of those 2 landfills. And so that's why they are, because it is imminent. We are closing 1 landfill in 2025, that's close to completion, and we're starting the next one in 2026. The other thing that's important is deferred revenue. When we receive grants from the federal and provincial government, that is not our money. We sign a contractual obligation to make sure that the grant can be used for those capital projects. And we do have a requirement to ensure that we have access to $1.8 million for those projects, so that we're able to pay and report back to the upper tier governments on a timely fashion. On December 31st, we had accrued liabilities, meaning that we owed other people money, entities, and of that was accounts payable. So those are our vendors that we list on our voucher report that are in-year operations, and we owed $2 million at that time. So this is a statement of financial position is a picture in time. It doesn't reflect the activity that happened through the entire year. So on December 31st, 2024, we owed $9 million, and we had cash on hand, or the ability to service that debt, of $6 million, and the municipality had a shortfall just under $3 million.
What about our reserve, how does that fill in here? How does that fit?
Thank you, Council Vink. That's a great question. Reserves, not many municipalities, and I can't paint a golden brush, because every municipality are of different sizes and of different asset base. But I think if we looked at the cash position of most of the municipalities in Ontario, if they have a reserve balance of X, they wouldn't always necessarily have a bank balance equal to X. So we have reserves, and that is for the future replacement, and we do capital projects. It's based on grant funding through those obligatory reserves, debenture, and the savings is not necessarily equal to the total amount of that capital project. It is what the municipality has set aside, usually through replacement, through the amortization and new development. So not normally is it that a municipality, if we have, and I go back to the statement that was presented in the financial statements, our reserves are $6.279 million. And what I'm messaging is that we don't have any dollar value in our bank accounts on December 31st, 2024, in the equal amount of our reserve balance. In short, Councillor Vank, we have reserve balances on paper in our financial statement, where we have been contributing to our reserve balances, but with the large projects that have happened over the past few years, for example, the arena, the daycare, the library, capital development, we have used our cash that's in our bank account to service those items. We've also used the internal debt program to finance all of our capital needs, and we have consumed the cash that, Councillor Vink, in your question, we would think would be in our bank balance.
Yeah, go ahead, Councillor Vink. Follow-up.
Thank you, Mayor. What about last year when we received the budget? I don't remember seeing that we were going to have a negative balance. So what happened from last year's budget to this figure here?
Thank you, Councillor Vink. That's a great question, and if we could touch on that just a little bit. The budget is in-year spending. The budget, and I think the message that I would also like to convey is we do not have any challenges with our in-year spending. We propose to council a budget, and staff have done a great job historically with servicing that budget. As Graham Scotts and Ends presented, we had a surplus last year, meaning that we didn't utilize all of the budget that we had proposed to council, and that was put to our accumulated surplus for future years. When we're talking about budget, the budget historically has been presented on a cash basis. We're required to do it on a PSAB basis, which means there's items in there, and I'm going to refer back to the amortization because that is a conversation that repeats. The cash balance wouldn't necessarily, the way this council has received a budget previously, would ever become part of that conversation. When we're talking about the balance sheet versus an income statement, the budget is our income statement. The balance sheet is the overall health of the corporation to service all of its financial obligations, whereas the income statement talks about what's going to happen that current year. So when you received the operating budget, that was discussing the activity that was going to occur in 2025 only. So it would not have been a conversation based on staff interviews and based on what I've seen in the budgets that have come historically to council. Debt management has not been a conversation that we can see has come to council as a report.
Okay.
So if we go back to at the top of the screen, you'll see in 2022, we also had very close to zero as our net financial assets. But the year before, we had $4.5 million in our financial assets. And if I move a little bit further back up on the screen, you'll see that a cash balance account of $5.5 million. And then in 2021, and then 2022, we dipped to a very similar scenario in which we're presenting today for 2024. And then 2023, it goes back up, and now we're back down. I would like to suggest that the 2021 bank balance is probably where the municipality would end year to year, maybe a little bit higher with other cash investments. And when we go back and I look at 2021 through to today, we're going to see that the servicing of the arena costs are what complemented that decrease from $5 million to $200,000 in 2021 to 2022. Is there any further questions before I move on? So if I put it in, these words are all very overwhelming. So if we put it into a graph, you can see where in 2021, at the left-hand side of the graph, we had $5 million. And then at the middle line there, where there's a dollar sign with nothing beside it, that is the catalyst in the year in which we started moving downwards to the curve. What I can say is when I joined the municipality and started having interviews with Amanda and understanding where the municipality was moving forward to, looking at the different financial statements that we were in the middle of, we have not been sitting idle, and that's, I think, important for council to also know. Since July 2025, and I've realized what was happening, I implemented a daily cash management analysis. So what we do now is, and this is why I go back to say that we are managing, and this is a situation in which we will come out forward from. So what we've done is I've gone back and I've reviewed how we pay our accounts payable, I've reviewed how we process contracts, and I've reviewed how we record capital expenditures and how we apply the reserves. So since then, the finance team have implemented positive cash management processes, And that is part of the conversation today through updating our policies so that we can continue to move forward and move the municipality in the right direction of not utilizing our debt servicing needs through the bank, and then also having that balance go back up to a positive number. As I mentioned before, we did some research, Clerk's Department, our CAO, all of our senior leadership have done a great job over the past few months digging into historical files, and I can confirm, as I mentioned earlier, that we have not been able to locate any policies, resolutions, or bylaws where this conversation has come forward to council. And that's the preface for the need today, is that we do need to recognize that our internal debenture program is not working. At some point in time, because we don't have a strong policy requiring the treasurer to report back to council, and we have always embraced and held that we have no debt externally, that has caught up to us with those projects that I had mentioned previously through those capital expenditures. We've used the money for good work. The money is now been replaced in assets. We actually have an asset similar to your home. You have a mortgage, but the asset is still there. So the arena, the daycare, the library, and the equipments and the growth that we're doing, we've just consumed the cash in our assets. Now it's time to put the cash back into our bank account. And the messaging through this entire report is that I'm here today to request that we start thinking about external debentures. It's not a bad word. It provides benefits to us in that when grants are also awarded through our financial information return and through our annual repayment limit process, if we apply for a grant and the federal or the provincial government looks at our servicing capacity to take on new capital improvements, and they say, well, they don't have any debt, why do they need a grant? So that's one of the positive outcomes in messaging, is through external debenturing. It's replacing the internal debenture process. It's not new. It's just replacing how we go out to get debt. And there is an advantage to external debt. Every financial planner will tell us personally in business and through a municipal advisory that it's good to have a balance of cash, and it's good to have a balance of good debt. And external debt for capital improvements is good debt. We don't want to put the money underneath our mattress, but we also don't want to put our money in bricks and mortar because we can't access that cash. It's also important to make note that since I've been here, I have not worked previously with Graham, Scotts and Ends, and I can tell you that their collaboration in this report and through the 2024 statements, I just would like to add that also vote of confidence and give thanks back to Graham, Scotts and Ends. They have been very valuable to this process. Every question I've had, they've had the historical information. They have worked on the analysis. And so I think it's also important for council to know that this is a collaborative approach through our auditors, and the information that's provided here is also recommendations of theirs. So we've gone through a little bit about what an internal debt program is. And Councillor Vink, this might be helpful in your reserve question. So an internal debt program is when we borrow from our reserve funds. The mythology behind that is that your reserve funds are also cash assets, so they're in your bank. So what it does is it utilizes cash on hand rather than external markets. And there are disadvantages of it if it is something that has to be micromanaged, because as we're seeing and having conversation today, it can change very quickly. And it can also eliminate the need to have additional expenses through legal fees and through broker fees. So there are some savings when the debt management program is being reviewed in a constant and detailed fashion. So that's what we've endorsed historically over the past, I'm going to say, decade. Because again, I don't have any, we weren't able to find any sort of policy or bylaw adoption from council. And we just need to move forward rather than looking at the past to say, looking for paperwork and documents. And the conversation today is forward moving. And basically our internal debt program has come to an end, in my opinion, and that's my messaging through council. So if we go back to, I've also included the internal debt program and how it's applied to our cash flow. I've included here another capture from our financial statements, and it goes back to that $1.84 million that we talked about with our obligatory reserves. Obligatory meaning that we shall keep that money. We shall not use it on anything other than what the federal or provincial governments have given us for. And at the very least, I would hope to see that our bank balance would be equal to $1.8 million. And so we do need to do some financial debt management on making sure that those obligatory reserves can be met through our cash balances. But that would be, at the very least, the balance that we would like to see in our bank account. Furthering with, and I don't think I'll be able to get this on the full screen, I'm hoping, maybe I did. So this is Schedule 11 that was in the notes of the financial statements, and this is the balances of our reserves. And again, we've used the cash that we would think would be on hand in our cash balance. We've used that. These are all council-approved reserves, meaning that even though it says public works equipment replacement of $567,000 on the second line, council can use through other decisions to utilize that reserve for a different capital project. They're not obligatory. They are not, by definition, saying that it has to go towards equipment replacement and it has to go towards public works. And that's what we've seen over the past few years, is that these reserve balances have been used for other capital growth projects. And I'm going to go back to debt servicing and building the arena, because it did go over budget, and capital and through staff reports, decisions were made to approve change orders and the capital project as a whole for it to be successful. And that was fabulous decisions made at the time by council that was in effect. But what we've done, for example, is we've used the money from these reserves and we've built and renovated the arena project. We've built a beautiful library. We've built a fantastic daycare for our residents to use. So these are the accounting entries for $6.2 million. However, if I was to put it back to that dinner table conversation, historically we've used those dollars to grow and build other capital assets.
Go ahead, yes, sorry, Mike, yep, you bet.
I just wondered if you could talk for a second, Denise, about the tax rate stabilization reserve. How does that work?
So I was going in, and so part of what I would like to do for council coming into 2026, because I do know, Councillor Scholdice, you had mentioned when the statements were presented by Jennifer from Grand Scots and Ends, that we need to maybe as council go in and look at what the purpose of some of these smaller reserves are for. Some of them are council community grants. So the working capital, when I went back to start researching it so that I can bring a proposal back to council on recommendations, that was something that happened through amalgamation, and I would like to dig into that a little bit deeper with the clerk's department and our CAO to understand how that was done. My high level is it was bylawed. It was something through amalgamation, so I'm wondering, and perhaps somebody at council will have more recollect, I'm thinking that when we amalgamated the townships, somebody had a pot of money in their reserves or in their cash balance, and this was the agreement signed at the time that this balance would be there and maintained for working capital for future decisions, but that balance would be there. And I think that's part of the review that's going to be coming forward and say, yes, we have this bylaw, we have the agreement, these are the capital projects that we completed that line up to that $500,000. Is that $500,000 still where we want to earmark through that amalgamation agreement? So a lot of good work needs to come to understand the historical reasons why these balances are here. There will be changes brought forward in 2026 on how to realign these and make them work more efficiently for council, and then also provide definitions on how historically those balances were put there. For example, the tax rate stabilization, I can tell you based on my past, it's tied to surplus deficits in year. It's meant to naturally smooth large increases from time to time, because one of the initiatives of council and staff is to keep the tax rate as evenly smoothed as we can without having large ups and dips. That's the purpose of the tax stabilization. Street light replacements are meant for street light replacements. So they are very specific. For example, the efficiency funding. We need to go back and we need to dig into past historical council decisions and staff presentations. What was the purpose of that? Does it still meet council's needs going forward? And is there a way to modernize how we can use those funds? Any other
Thank you.
questions?
I'll just take a breather there, council, around the horseshoe. Any questions? Everyone fine? Yes, Mark, go ahead, please.
So, we've got $6 million, over $6 million in reserves. I would, like myself, I'm okay with borrowing money, but I would use my own money first, before I borrowed more, because I wouldn't want to be in a situation where I had money loaned out at a lower rate than what I was borrowing it at. I wouldn't want to see us in that position either, because what would we do? Would we, have that $6 million in GICs or something, and then at the same time have money borrowed?
That's a great question, great statement, Councillor McGill. So a few minutes ago, I talked about good debt. So if I bring it back down to our tabletop conversation, our mortgage is good debt. A car loan is good debt. A credit card is not good debt. So by having an internal debenture program is good debt if we can afford it. Externally debenturing is good debt because it allows the municipality to continue to contract and develop and do capital replacement. So if we take that comment and back it up a little bit, the municipality has used their monies for internal debenturing and for extension of capital projects of $6.2 million. But we've used all that money. So now it's time to go back out and do an external debenture, take out a loan, good debt, and put it back into our cash. So the reserves are an accounting conversation, and we would like them to align with the bank balance, but we've already done that. We've used our monies that we've saved for our reserves, and we have internally debentured, and the program, for many reasons, is at the end of its life. So now it is time to continue to put that money back into our reserves. And I believe later on in my report, my proposal is, my recommendation to council is, let's go get some good debt, put that money back into our cash so that our reserve balance is closer to $6.2 million, whereas right now it's zero.
Okay. Yes, Councilor Link, go ahead, please.
Thank you, Mayor Allen. So Denise, you talk about external debt, but you have to service the external debt. So automatically, when you have external debt, you're going to increase the budget for 2026 to pay for that external debt.
That's a fantastic question as well. So you are correct. Internal debt is also supposed to be serviced through the tax rate. So internal debt and external debt, by definition, have the same mechanism for recovery. And that also leads towards why I'm recommending to council that the internal debt program is at the end of its life. So what happens is, and so we build a capital project and we debenture it over 20 years. Let's say that project is $5 million. We've taken $5 million out of our bank account for 20 years, and we've divided it by 20 years, and we're going to be able to have that $5 million to reinvest in another capital project, but not for 20 years. So you can see where the cash is being consumed somewhere else. Through the tax rate, what should happen, according to PSAB budgeting practices and good financial management, is the interest, which the municipality has assigned anywhere between 3 and 3.5% historically on their internal debentures, is also supposed to be recovered through the tax rate. And that is how the municipality becomes its own banker, because they take that interest that's been recovered through the tax levy and reinvest it into future growth and capital projects, and that reserve balance grows. What I can confirm through our auditors and through looking back through past budgets and reports to council, the municipality has not recovered the interest that was owed through previous budgets. So it is a misconception that when we borrow against ourselves, that we're using our money. We've actually discounted our money because we have not earned the market rate of return. For example, we have a checking account, and everybody, if they were to confirm their checking account, unless they have a minimum balance, they earn 0% interest. If you have a high interest savings account in your portfolio, you earn 1% interest. But that 1% interest comes back to you for future spending. If you have a GIC, as Councillor McGill questioned, you're going to earn 3 to 5% interest, and on a good day, maybe not today. And then at the end of the year, when that GIC comes up, you get that money, that cash, back into your checking account to further invest or to go out and buy something that you were hoping on your wish list, which would be equal to a capital improvement. Historically, we have left our money in a checking account, and we have used our reserves, we have used our bank balances, and we've not paid ourselves a rate of return for that investment methodology. So yes, we are going to have to, irrespective whether council would like to continue with an internal debenture program or go to an external debenture program. Currently, I wouldn't recommend that we go to a blended where we do a little bit of both. We do already do a blended amount where our drains are usually internally financed because that's guaranteed money coming back from the users. I wouldn't recommend. I would recommend over the next year, maybe 2, that we go to an external debenture program. But I can confirm you will see in the 2026 budget a levy increase, which will translate to a tax increase, because we do have to start recovering the interest. You just can't give money away to yourselves for free. We will see through council deliberations, irrespective of which program we decide to continue with, you will see an increase because we do need to start recovering the interest that for many years we've not.
Thank you. We want to proceed with this. I could have the privilege of the last question. I can see through your presentation, I have 2 takeaways. The cumulative effect of this internal debt has to be, that policy. It may be prudent to stop it, okay, and go external. And that conversation may shift to Amanda at that time because there's many sources for external financing that council will hear. Another one I found interesting, the takeaway was our accounts receivable. We have to be more aggressive at collecting these. And that comes in the form of not only taxes, but tile loans, things of that nature too. So the 2 takeaways, to the cumulative effect of this, we have to reverse it. And secondly, we have to be more aggressive on our accounts receivable.
That is correct, Mayor. And to follow up with your sources of internal debt, it's not necessarily going to a bank knocking on their doors and saying, I would like to take out a loan. We have Infrastructure Ontario. We have capital market rates. We don't have the privilege of being aggressive, so it is guaranteed. It is a low. We wouldn't go into anything variable or high risk. It would be through a bank loan. It would be through a trust company. So the municipality has very limited ways in which they can apply risk, and I would not ever recommend that the council goes to a high-risk entity, but it will be probably through a bank loan, probably through IO, maybe looking at our partners through the county if there's any sort of loan program that's available. There's many, many different ways that I will bring forward with Amanda on how we can service the debt. But first, I need to have council's approval to go out and have those conversations to find out what best suits the municipality. Because it is important to maybe have a fixed rate, a variable rate, an IO loan maybe that's extended longer, whereas a market loan maybe only a 10-year amortization. So those are conversations that will come back if I do receive council's endorsement to go out and look at external debt rather than continuing with the internal debt program. But you're exactly right, Mayor Mayhew. Those are the two main takeaways from this report, is that we need to modernize our approach on how we save and how we spend and how we bring those monies back in for future growth.
Okay, thank you, and continue on.
And I apologize again. I know this is dry, and I hope nobody has the need to go to sleep. Thank you so much for your patience in continuing with me. On the page, I don't have a page number. When we go to, I've got the accumulated surplus up from the financial statements, and the Councillor McGill, you've brought up the landfill closure, and we've talked about how we've been servicing it. So I've highlighted for you 2022, 2021, 23, and 24, and you'll see that we have amounts to be recovered. And that is where the landfill fits into this conversation. These are amounts that we have saved, we have allocated for future closure, and we have fallen short of having the cash in the bank to pay for those expenses for when they come due. So for example, this year we've been closing the Limerick landfill. I get the two mixed up. And the costs you've seen through the voucher reports have come in, and we've serviced the payment of that closure not through the money in our bank, which would be indicated by the $4.9 million. We've used it with our cash on hand. So that, Councillor McGill, is how the landfill comes into it. It's money that is real and is money that's upon us in this year and next year and the year after. So the next 3 years, we will be needing that servicing, that cash flow, in order to close the landfills. The next line underneath is unfunded capital, and you'll see in 2024 that the amount is $9.6 million. If we line that back up over that reserve schedule of 6.2, that's what we've done with our reserve dollars, is that we've paid for capital in the amount of $6.9 million, and we only had $6 million in our reserve savings. Any questions?
No. Looks good. Continue.
And again, I just included a chart, these to show the flow of how we have utilized more money in which we have saved. If you go to page 8, I've listed the 4 largest projects that we've had over the past 4 or 5 years. And you can see that we have internally debentured against our cash balance. In 2018, we did a loan amount for $2 million. And the payback period is 2037. So in theory, in 2037, we should have $2 million in our bank account, plus the interest earned at 3% a year, which we don't have the interest. If we go down to the Children's Center, we've internally borrowed against our cash balance $891,000. The payback is until 2046. The arena, we internally debentured $4.5 million. And if we go back to the very first page where we had that large $5 million bank balance, the timing, if we were to line it up, is exactly when we paid for the bills to pay for the arena. And 2040 is when we anticipate on having all of that money back into our bank balance. And then we've also, in 2025, we've purchased a grader, and the debt management schedule prior to this conversation was that the payback would be in 2044. I'm not too sure if that grader will be on the road in 2044. It could be, but we're anticipating, what we've done is we've lined that up, that when it comes time to replace that asset, we'll have all the money back in our bank to replace it. However, again, we've used our cash balance to internally fund it. So those are the four items that I can pull out from our capital, or from our internal debenture program, that are monies that would be prioritized to bring back into our cash to continue servicing our long-term capital plan.
And just one question. Yes, it's very evident that we've used our own money to finance those four projects, and you're indicating when the year payback is, but there's no interest on that.
On paper, we've charged ourselves interest. However, I can confirm through the tax levy, and that's how we earn the interest back, is by smoothing the tax levy, and that's why we do a debenture. And I can confirm historically, we have not done that.
I thought that was my assumption. Yeah. Okay. Thank you very much, and continue on, Denise.
So to round all of this wonderful conversation up, and again, it's a lot to take in. Next steps. We're proposing that we pause the internal debt financing program, not necessarily end it. Maybe we bring it back at some point. We do have to continue doing it for debentures for the Municipal Drain Act. Go out and allow us to come back in early 2026 with recommendations to fund those large projects. If we go with an IO route, the arena, the library, the daycare are fantastic candidates for an Infrastructure Ontario loan. And those are the loans that usually come with a lower interest, longer payback, whereas a market loan is usually a 10 years amortization, but we can, through Infrastructure Ontario, amortize the loan to the life cycle of that particular capital asset. So those are very good candidates to just pick up the entire project 100% and go to Infrastructure Ontario and ask if it qualifies for their program. So that's why I've identified those rather than picking up little pieces, little equipment purchases or capital improvements, because IO would not qualify for those types of expenses. The other thing that we're doing in combination with Amanda's report that Council heard last night is through the Service Excellence Review, is one of the things that will become a priority through that is looking at the finance team and looking at, do we have the right policies in place? Do we have the right processes in place? Does what we're doing today make sense in order to bring this council forward and leave a legacy of good, strong fiscal financial management? So we will be doing that, and I can confirm that our finance team is excited by doing that. They have great information and they've had wonderful input, and we are looking forward to bringing those different changes forward to council, and we've already seen how those changes have started to take effect. So I can confirm that by modernizing our financial operations, we're already benefiting from them. The other recommendation is adopting a formal debt management policy, which is included in council's agenda. And you'll see through that, and we can go through that policy. Has very strong language on how my position will report back to council on a consistent and a regular basis, where historically we have not necessarily had that policy or the mandate, or due to past interactions with staffing levels and recruitment, maybe there hasn't been the proper custodian of that position to give timely reports. But that policy is very strong in its language that council will be updated on a regular basis with detailed information, and not just the good word that we're in good financial strategy. You will be seeing a formal debt management schedule on a regular basis, included with your financial statements and your budget. And then we've listed enhancing reporting, and we've listed those, a 10-year capital plan. I can't find one that's ever been presented. I'm sure they have been, but I don't have access to one. So in 2026, we'll be building one. That is a large process. It takes all the members of SLT, and I'm looking forward to it because that is the storybook that we need to read and present to council in collaboration with council to see where the municipality is going and to make sure that we're on the right track. We were going to be enhancing how we deliver the budget by different modernization of software. Currently, it's manually done, which allows for not consistent and perhaps sometimes not complete information being given on a timely basis. We have to start recovering those interest payments, and again, looking at how the finance department operates and the policies and processes in which govern how we report back to council. Lastly, I just would like to reaffirm that there's no immediate financial implications. There will be implications going into the budget deliberations and into 2026 from a cash management perspective and how we do business. It will affect the tax rate. But the report today is to have this roundtable conversation and to educate where we are currently and how you're going to see different conversations through the budget deliberations. Happy to answer any questions. We can go through the policies that have been presented, and we can also go through the management letter in which I have included into the report from Graham, Scotts and Ends. And what that does is, in collaboration with them, we don't like seeing this type of management letter. However, I support receiving it because it gives us the baseline of where we need to go from their perspective. And it also collaborates with what I'm reporting to you today as a third-party verification of priority needs that we need to look at.
Okay. Any questions? Yes. Councillor McGill.
Yeah, I think Graham Scott Enns has been our auditor for a few years now. Do you know?
Since 2021.
So they would have done 21, 22, 23, and 24? 4 years?
Yes.
Yeah. So they never mentioned anything like this before. So why now? I mean, I guess things change, but they didn't seem to have a problem with the internal financing before.
I can confirm, Councillor McGill, they have brought it up. It's never come to the horseshoe.
Okay, but I didn't see it in their reports from other years.
So historically, I believe in full transparency. Some staff, and I'm not quoting, I'm quoting globally right here currently. I'm not talking about past staff at Southwest Middlesex. Globally, the package, the financial package that comes to council doesn't always include the management letter. I can confirm that it has not been received in the management letter, but it hasn't been fully understood, the impact through past staff at Southwest Middlesex, multiple past generations. And it is highlighted as a priority and became my number one priority, I think, on the second day that I was here at Southwest Middlesex. So it has been brought forward to previous treasurers that maybe didn't get communicated to senior leadership, including council, but that is also the catalyst of why we're here today.
If I could interject too, of course, as mayor, I had a preview to this prior to coming to the Horseshoe and conversations with Amanda. And of course, the first question we asked, what brought us to this particular point right now, where we fiscally responsible or not responsible. We weren't fiscally responsible. There's no blame, no finger pointing here to Amanda's business administration or this council's spending habits. It's a result of a style of financial governance that has come to the end of the road. Okay, it worked in the past, but it cannot continue in the future, and that's an opinion. I shouldn't express it. We take council's opinion on it, but we've come to the end of the road on that. So there's no finger pointing at council, administration, or treasurers of the past. Okay, and if someone wants to bring a finger pointing subject up, then we're going to have to go in committee of the whole at a later meeting and discuss that. Will not be discussed publicly. Okay, yes, Martin, thanks for your patience there.
Sorry, I'm a little concerned about the last line. We, according to this audit, we still, I don't want to really, because the mayor talked about in camera, but the controls are still not in there.
Excuse me, Mayor Mayhew. Councillor Fink, can you tell us what report you're looking at, and I can share it for all of council?
Your last statement, the management letter. Yeah,
The
and
management
the last
letter? Fair
line.
Of the management letter, sir?
Yes, the last bullet there was not required to identify. So I wondered why we're not having them check things out like that.
Fair enough. I for some reason, I've lost that report from my screen. So to answer that, so auditors are hired not to, they look at our processes and our policies. They're not hired to govern or to recommend to council what should be said in those policies. What they do is they come in and they test for significant financial errors or representations. They look for fraud. They look for many different things at a higher level in which my role would look at it more finite. It is an expectation that our department, the finance department, and that's why we're undergoing the reviews and looking at changes on how we can do better and modernize. But it is not necessarily the auditor's role to come in and tell the municipality and the staff on how to do their job. The custodian is to make sure that they report back to council the health, well-being of the municipality as a whole. And if I line that up with the conversation we're having today between external and internally debenturing, that is not their mandate to tell you whether it's a good choice to adopt or not. That is the treasurer's communication to council and then council adoption. We can continue with an internally debenturing program, or we can go to an external debenturing program, and their opinion will be the same. They're both fine programs to utilize. But as Mayor Mayhew just said, and thank you for those words, because it is just significantly reporting today that the program has come to an end. So their management letter this year is backing up the information and supporting the collaboration that Amanda and I have asked for the auditors to provide us is they now agree that it's come to an end and we need to look at change. But it is not their mandate to tell the municipality how to do their job.
Okay, thank you. I think that explains it. I saw Councillor Haggett's hand first and followed by Councillor McGill.
So basically, and like to the kitchen table, as you say, we spent all our money, but we didn't use our money to make ourselves some more money. Is that the way?
Yes,
I
that is
understand
correct.
it?
That is
So
correct.
That's why we're cash strapped or we don't have any. We didn't use some of it to make more money for the municipality.
Yes, that is correct.
Just trying to make it.
Yes, that is
plain.
correct. We've not been good bankers to ourselves.
Okay.
And the other thing is the projects that we've used for an internally debenturing program are larger than what would be fiscally responsible for utilizing it. So an internally debenturing program is great for the drainage works because that is covered from the users, from grants. It's a short-term turnaround. It would be good to use it for a grader because we would borrow from a reserve to buy the grader. But when we're talking about assets that have 20, 30, 40 years of life, we haven't used my recommendation would not have been to council to use an internally debenturing program for those particular items.
Yeah, you bet.
So that's where, if we're gonna go into a $15 or $20 million infrastructure, we would go external, right? Because that's so big.
Yes, that is correct.
Okay.
We would go and obtain good debt, and we would have the conversation about how it's being financed and how it impacts the tax rate for that 20, 40, 50 years.
Perfect, thank you.
Okay, thank you. And Councillor McGill, please go ahead and ask your question.
Well, through the mayor to the treasurer, I can't see anything wrong with a blended approach where we use internal financing when we can, and if we can't, because we have projects that are more expensive than what we have in reserves, then we go external. And that way, we wouldn't run into a situation where we might have money in the bank earning a very low rate of interest and have money borrowed at a higher rate at the same time, which to me doesn't seem like a very good thing to do. In this report, though, this whole report, the most concerning thing I see, and we've known about it for a while, is that there's way more liability on the landfill sites than what there is in reserves to pay for the landfill sites. And, you know, we're talking about, don't point the finger or the blame, but really, with those landfill sites, there should have been money put in reserve over the last probably couple of decades, big enough so that at the end of their life, there was money there to properly close them, and that wasn't done. And, you know, it looks to me like it's about $3.5 million, too low, like almost $5 million in liability to close the two landfill sites, only $1.5 million in reserves, so $3.5 million difference.
Yep. That's so. Denise, there's one word I have not heard in the conversation, and this problem, this issue, is correctable. Okay, it is correctable.
100%.
And it could be corrected very fast. And the word I'm going to capture here is refinancing. Does that word translate into this conversation?
That's a perfect word, Mayor Mayhew. It's refinancing. It's changing the way in which we approach our debt. We have been financing our debt, and up till a few years ago, we have not had large capital projects, and it was working. But the municipality has done some great things with growth, development, and new assets, asset replacement, bringing back items to the community to enjoy. And it can be termed and capped as refinancing. And it's a business decision. Like I said, this report isn't to heighten any fears. It is correctable. I just need council's awareness, and then I need council's endorsement.
And one more follow-up, that would be, the most expedient way to put us on a long-term legacy of proper financial management.
Mayor Mayhew, I would recommend it's the only approach
Yeah,
at this time.
I agree. Councillor Vink?
Mayor Allen, thank you. Treasurer, I agree with what Councilor McGill says, and I'd like to point out that we still have a lot more debt. We have the Glencoe outlet drain, and to me, that's where you would start with the external financing with that, because that's going to be, from what we've seen, looks like it's going to be quite a liability.
That's a great question, Councillor Vink, and if I could be direct and quite frank, we wouldn't have the money in our bank to pay for the costs associated with that drain. That's why we need to externally debenture some of our historical projects so that we can continue moving forward and pay for future development and capital projects. So that's why changing our focus and going out to market for these projects puts the money back into our checking account so that we can continue with the outlet drain, which is contractually obligated. And that's why we're refinancing rather than using our own cash. We're going to use someone else's cash, and we're going to continue, for example, with the outlet drain.
Okay. Council, I think we'll let Denise continue on with her program. A few pages left in the report.
I'm done my report,
Okay.
actually, so thank you for the great conversation. If you'd like, we can review the policies. I can confirm that I have worked with what is normal in our municipality, and other municipalities also have similar policies. I haven't created anything. The wonderful thing about municipal government is all of the treasurers collaborate, municipalities collaborate, which is a fantastic availability. And I can confirm that I have not restricted or put anything in there that wouldn't have been seen from other councillors in other communities, so conversation can happen. But what it has done is it's very specifically said, for example, we could go, I think I've lost it, but it sets out very detailed when we use external debt and when we use internally debt. For example, if the payback is 2 to 5 years or less, internally debt, similar to our drains, similar to buying a dump truck or something that is more flexible in how long it is on our asset base. But if it's more than a 2 to 5 year payback or over a certain amount of money, then we go to external debt. So the policies that I've presented for the debt management policy is very clear on when staff can utilize it. It is a blended approach to debt, and it also reports back to council it reflects the normal responsibilities of the role of the treasurer to report back to council so that you are in the know on a regular basis. And it also, it allows and enables the department, encourages staff in the department to create those detailed reconciliations so that I don't come to you, or a future treasurer doesn't come to you and say, we've researched and this is what we found. However, we need to modernize it and do a better job.
The recommendation, Council, as it's been presented in your agenda, is for staff to bring back options on debt financing, go outside of our own in that quest. And the options will come forward as to where those sources of funds could be made available, at what cost would those sources of funds be available. So in acceptance of the recommendation, I think, we have to be honest with ourselves and honest with staff, that if we ask staff to bring forth information on debt financing, that council are supportive of considering that move and that, for lack of better words, that refinancing position. I can certainly see the importance of it, and I would hope that if staff went to a considerable work to bring back that information to us, that council would, entertain in a supportive manner the information that would be coming forward. There's a lot of work to do, and so we want to make sure that we're open to the opinions of our staff on what is best for our municipality. Councillor Hagan, I see your hand.
Well, I think there's, way past my lifetime, there's a lot that has to be done in all of Southwest Middlesex. And I think, I'm not going to bring up stuff that I'd like to say, but I will move on that motion because I think we need to get on track. And by the way, that was a terrific report, great job. So that's all I want to say. I will move on that.
Okay, and is there a seconder for that? Okay. Council, any discussion, and we can certainly ask questions to Denise through the chair. We're on schedule. 2 hands have gone up. Councillor Vink first, followed by Deputy Mayor.
Yes, I would support it slightly. I think it should be, every case should be on an individual basis. Right now, I think the only thing that should be done is the arena. We have even a reserve fund for the comprehensive library that's still in the reserves. And so that would give us, if we did the arena, that would give us a bit of a cash flow, because we got other projects that will need external funding. And so the more external funding you have, the higher your tax rate's going to go to pay for the external funding. So I'm not ready to give a blank check to staff for external funding.
I think, that could be, it was in the report, I think it was the 4 of the 5 main projects that brought us to this situation. And of course, we realized we get rental revenue from the daycare center, we get rental revenue from the comprehensive library. Very often, arenas don't pay the bills in terms of how much money they bring in, or swimming pools or anything like that, or splash pads. But perhaps future presentations of staff could come up, Martin, with a scenario like that. That this is critical to outsource the funding of this, and perhaps the others could be considered or viewed in the fact that they bring in revenue that they're going to pay for themselves. But we can't miss that interest shortage that we're receiving, is what my concern is, because nothing's free in life. And when we finance our own debt and do not charge ourselves interest, we're going in the hole. Anyway, and thanks, Councilor Schultes, or Deputy Mayor Schultes, go ahead.
Mayor Mayhew,
Yes.
may I follow up with a little bit of information? Thank you, Councillor Bank, because there is different approaches that we will bring forward, 100%. The other thing that I would like to highlight is we also talked about those large accounts receivables and taxes receivables, and the need, or the good work that we're already doing in looking at how our finance team is going to collect those outstanding costs. So I guess my report maybe fell short, and I hope it did not, but if it did, I'm not recommending that we actually go out and externally debenture those 4 programs. What I'm saying is those are the 4 programs which we saw the change in the curve of funding where we went from a positive to a negative cash balance, and those are good candidates to go out and maybe do an IO loan through, and they will give us the best rate. But what we need to do, and you're right, maybe the arena is the one that staff comes back and recommends through a blended approach. But as I lead and coach and provide guidance as my role as treasurer, we're going to be working very, very hard at the same time to bringing cash back into the bank account through collection of accounts receivables and monies that are owing otherwise. So you're correct. We may not need to go to 100% fully external debenturing, because as we collect those arrears, that's also money in our bank account. So I just wanted to table that as well, because what I would not like to see is that somebody leaves today without asking or receiving all of the information that staff has already talked about. And that is a very good approach, and maybe that is the one that staff comes back for council to entertain.
Thank you. Deputy Mayor Schuldice, followed by Councilor McGill. Okay, that's great. Councilor McGill, thank you, Mike.
Yeah, I can support the recommendation because it does say that for the treasurer to bring forward options. So it doesn't say in just one option. I wouldn't like to see that. And as far as it, I mentioned the landfill sites. I think the deadline for delegations was Tuesday, right, for Roma? And I asked our CAO if she could request a delegation to see if we could get some funding to help out with that landfill closure. And, probably the main reason the reserves aren't big enough to cover the cost of the closures is probably people on council and staff over the last 20 years or so, they would have no idea that it would cost that much money to close those two landfills. They probably thought they were putting away adequate reserves, and it turned out, well,
Yep.
If the landfills weren't closed the way they were, we wouldn't be looking at these costs. So to blame staff years ago, I don't think is proper.
well, the landfills would be closed eventually in any case. There's landfills closing all over the province.
Okay. All right. Let's give Councilor McGill.
So I know the province doesn't like to give money towards closing landfills, but hopefully our delegation request gets accepted and we can at least talk to them about it. It would be great if we could get some money.
That, and of course, as you know, that just request, the request has been submitted to speak to that ministry. Unfortunately, there's no guarantees that we will get a spot. That is a very busy portfolio, and I hope we get a spot. It would be ideal to bring up financing at that point. And Councillor Scholdice's remarks are his opinion, and he's certainly encouraged to make that opinion, but as we'll follow the rules of procedure, allow each councillor to speak, to finish what he has to say. You want to elaborate on that anymore? It's okay, all right, okay. Yeah, I think so. It's that's the chair's opinion as well. The questions have been basically among three councillors here. I want to entertain the opportunity for other councillors to speak. We appreciate the mover and the seconder on the recommendation that's been made. My last call for conversation on this. The recommendation, I'll read it to you. The Council of the Municipality of Southwest Middlesex received the report dated November 20th, 2025, prepared by the Finance Department, titled 2024 Financial Statement Review, FIN 2025-22 for information, and that Council review the draft capital financing and debt management policy and draft reserve and reserve funding policy, and request the Treasurer to bring back prior to the 2026 budget deliberations the final policy for council adoption by bylaw, and that the treasurer bring forward options for external financing during the 2026 budget deliberations. Any clarity to that council require? The chair will call the question. All in favor of the recommendation as stated? 2, 3, 4, 5. All opposed? 2, 3. Motion passes. Recommendation is accepted. Yes. 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 No, you certainly can. You've been very quiet.
Thank you. Yeah, the quietest meeting I've ever been in for me. Thank you, Mayor, through you to Council. I just wanted to take a minute before we move on, and as you know, this is the only business on the meeting, just to acknowledge and commend the efforts of our Treasurer, Denise, who literally on day 2 with the municipality came into my office and we had a very candid conversation about our financial position. Denise has worked diligently in her 4 months with the municipality to address this challenge and some others in our finance department to ensure that we could provide council a fulsome report that provided some additional transparency that we feel is necessary, the both of us. So I really want to thank Denise for her efforts and her presentation today, and council for your understanding in supporting next steps. And of course, I would offer on behalf of Denise and myself that in follow-up to this meeting, before or during budget deliberations, if there are questions about the information that has been shared here, of course, they can be entertained at the council table, but we're also happy to meet with you to answer any questions or concerns about this on a go-forward basis while we, in tandem, Denise does the work to bring back more information to council. So thank you for that opportunity.
Very much. Just before we go into the bylaws, I think in terms of a definition of true leadership is self-evaluation and self-improvement. And I think that applies to any corporation, of which Southwest Middlesex is. So if you see a problem, we can't run away from it. There has to be a solution. And I think in terms of acceptance or rejection of this, we just can't close our eyes. We have to move forward on this. And I think we'll certainly look forward to the options presented, and that there can be some collaboration of acceptance on this following seeing the options that are presented to council. At this time, we have a bylaw to confirm the proceedings of the special meeting for November 20th, 25. May I have a motion to move the bylaw for the council proceedings? Is there a mover and a seconder for this? Councillor Emery, thank you. Seconder, Councillor Haggett. All in favor? Carried. Motion for adjournment, council. Who's going to entertain that? Councillor Haggett. Councillor Vink. Thanks very much, Martin. Meeting adjourned.